Hi, welcome to the Market Alert for Tuesday, the 15th of March 2022. So futures fade as yields soar, oil slides and China stocks crater. If the US decides to impose sanctions on China in total or on individual Chinese companies doing business with Russia, that would be a concern too, right? That's just going to escalate everything. The whole story is still up in the air on the case. So what happened to the Hang Seng? Well, you can see there dropped from 24 down to 20,000 during the last couple of days there. You can see a massive drop. We'll just go to 1 month there. You can see how prices have moved lower since, actually been moving lower since February, but big drop. And also in the Chinese index as well, which I don't have a chart to hand and it's not really our focus, but that's the background there. You can see that the Hang Seng down to 18,000 from 24,000. And suffocating impact from higher rates will force the Fed to ease much sooner than expected. Absolutely. What I said yesterday, it's complete BS. They're just saving face to increase interest rates maybe a couple of times, and then by December we were back to zero rates and also printing once again. There's no other way. Fed QE is over until it comes back. There you go. Exactly the same thing. Have no fear. QE will be back. Yeah, it's all a token gesture. What with hyperinflation, they got no chance, have they? US household expect record spending increases as all prices soar. The Fed is so effed. And talking of inflation, UK yesterday announced that men's suits will no longer be included in the numbers, apparently, because we're going to be selling more sports bras, and that's going to be far more important to the numbers. You can read the rest of the article. It's just laughable as ever. No food costs, no energy costs, no house price valuations, nothing. We all know that inflation's 17 to 18%, even though they trot out this BS of it being at 7%. We know the drill. We've seen it for years. And news today, what have we got? Only PPI, that's out at 12:30 because we've got an hour difference at the moment. Meanwhile, in the Dow, yesterday the market fairly quietish, traded up and then was hammered down, stuck in the sideways range. Expected to be quieter today unless something happens in Ukraine and Russia. Of a mega situation, i.e. something that you wouldn't want to happen. Or the threat of it, but otherwise expect the peace talks around 11 to bring the market back up, and expected also to tread water until tomorrow when they get the announcement. That's already factored into the market anyway. The market will rally on the news that the rates are going up, even though they should go down, because that's the way it works. It'll go up temporarily and then the reality will kick in. But yesterday you can see the market moving higher and trading till it took out the previous day's BRN. We went through the DP, and then the market was hit with selling and then sailed all the way down to the downside. The pattern's here, isn't it? Move the market up in the morning for the cash markets, move it up for the cash market in the Dow. This is the classic. Move it up, offload the stocks, and then it can fall down. And we've seen this pattern for the last 2 or 3 weeks now. In the German DAX, we've got, if I can find it, there we go. The market trading up to 62%. Again, moved up yesterday on the BS of talks. If the thing I can't get my head around here, if we've got talks of this war ending all the time, every day, more or less the same time, peace talks and everything else, why have 40,000 so-called people in the UK offered to take in Ukrainian refugees? Why would they want to actually promote a scheme like this if the war's going to end in a few days? Let me tell you this war isn't going to end. This war is engineered for other purposes as well. This isn't going to end in a few days. It's going to be dragged out for months. Make no bones about that one. And if I'm wrong, I'm wrong. But I just cannot understand why you would set up a scheme unless it's for the virtue signals in this world, to be paid £350 per person to come over to the UK. It just doesn't make any sense. I thought the European laws were that the first country that offered any sort of military conflict protection was the one that you stayed in. And I mean, I just don't understand it. I'm not against immigrants. It doesn't affect me in any sort of way, shape or form personally, apart from taxation. But I just don't understand why you set up a scheme to do this. It just bonkers to me. And it also tells me, more importantly, that this isn't going to end anytime soon. Just odd. Maybe it's just me, maybe I'm odd, but it just doesn't make any sense. But anyway, back to the markets. You can see trading up to the 20-bar moving average yesterday, which I alluded to, and then we've got some supply there. I wouldn't be surprised if we see the market move through this, because it's discounting what's happening in the war. It's become the norm. Certainly the norm with the flaming every morning where we get the peace talks are going to restart. And yesterday they were talking about technical peace talks, whatever technical peace talks are. Bizarre. But anyway, just in case we're going to move to the downside, these are your areas of support. Let's see if they have any effect. 5-bar moving average ties in with the 50 bar there, 50% retracement on the fibs. In the 30 minutes, again, you can see yesterday, peace talks, market up, and then we get the retracement, and then we're back down, and we get the bounce off the 50 EMA, and then we get, again, the retracements, and now back down to the 50 EMA. We've got a bit of volume there, it's nothing major, but we're oversold, so again, we just need to get back through the DP, and up to yesterday's high, to that 62% retracement there. In the 5 minute yesterday, in a bit more detail, let me just grab this and move it across. You'll see all of the action there. Market oversold to begin with. Let me just change the colour. You can see there the market's oversold. We've got the retracement in there, we've got the demand, and off we go. We get a pullback. Back to being oversold, and we can see that that's 78% retracement, and then we're free to move the market up. We get 1 bar where the market closes below the 5-bar moving average in the 5-bar, but otherwise the market continues to move higher. Got a bit of divergence there as the market pops at the top, and look at that, we've got 89%. And then down she comes once it breaks the R1, comes down with the Dow in the afternoon there. So again, all in place and showing exactly what's going on. Overnight, like I say, you can see the markets trading in quite a decent range there at the moment. Let's just have a look. 100 point plus move, but quieting down since we're just sitting on the minor BRN there at the moment. In the currencies, let's have a quick look. JPY moving up yesterday. The dollar's moving down along with the metals, which is interesting. You can see they're stuck at the moment at the 20-bar moving average and the 50 EMA. Any sort of move to the downside will be hopefully supported by the 200 MA. But don't forget, the interest rates going up tomorrow is positive for the dollar, so you're likely to see another move to the downside in both the JPY in its 30-minute and daily chart. As you can see yesterday, the market moving up and then moving down before moving up, so we could do with a bit of a bounce there before we get the move to the downside. In the pound, still moving to the downside, not closing above the 5-bar moving average. There's only been 1 bar in the daily chart that's done this. Then we had a resumption as we closed back below. Market finding support there. Let me just have a look at the weekly charts. Again, you can see that we're at 78% in the weekly chart, and we've got the 128 level down here as well. In the 30-minute chart, so you can see we've had a bit of a bounce. We were oversold. We were at yesterday's low. The market put in a retracement, got the demand, and we've rallied up through the DP, but we've actually traded up to, we'll just grab this from here to here. You'll see the market stop bang on the golden ratio there of 62%, and we've got stochastics crossing over, which we can see there, and some divergence, and the market's now heading back to the DP, which is 38% retracement, and a 50 EMA where the market's likely to find some sort of support. And finally, in the metals, well, as I said to you yesterday, we're not finished on crushing the silver price down to the 200 EMA is where we're going. Wouldn't be at all surprised if we don't end up back down, way down here. We've got another 2 weeks before the quarter ends. I'm going to just put in the big one because it's probably coming down to this area here. 2250 is likely to be the area once they can get it back down through the 200 MA to protect the 800 million ounces for the Bank of America. Physical silver is very difficult to get. I bought some more last week and it's very difficult to find. I was amazed. So there you go. We'll just have to wait and see what's in store. But the banks still keep crushing the metals on any news that they can. Gold the same, as you can see there. Also, once we got to 2,000, we don't want it to remain above 2,000. It's a psychological level. So let's rip it lower again down to 89, if not lower, to be honest with you. And if they have a ceasefire, you can expect this to drop $500 or $600. If that is a genuine ceasefire, that is. It doesn't matter about inflation, and I can tell you now, the Fed does not want the metals going up, and that's what they're doing here, is why they're trying to keep it suppressed, despite the fact that they should be twice the price of what they are. And in fact, silver, as I say every time we look at this market, it's now 50% cheaper than 1979, and everything else that you can buy in this world isn't. Just to give you a quick analogy, the other day I was thinking about this, and it's not so much inflation but devaluation of a currency. And in 1971, a Mars bar was 3p per Mars bar with 65 grams. You could buy 33 Mars bars for £1 in 1971. We came off the US came off the gold standard, and in 2022 you can buy 1.5 Mars bars and they're 51 grams. So you've got shrinkflation and also the devaluation. So 33 Mars bars down to 1.5. So that's what inflation is. It's about devaluation, not so much the cost of or increase, which obviously the two go hand in hand and they're inextricably linked. But if you want to get an impact of inflation on the devaluation of the pound, there you have it, 33 to 1.5 Mars bars over a period of 52 years. I think it'd be 52 years. Yeah, it is. Okay, so there you go. Oil down as well, crushing that at the moment, which is good news, of course. If it gets passed on at the pumps, we'll just have to wait and see, but fingers crossed it does. Down from $139, I think it was, wasn't it? Let's just check that. 138 all the way down to the 100. So we've lost $38 a barrel at the moment. And that's on the basis that the sanctions are going to be eased in Venezuela. Boris has been to the Middle East. Doesn't it make a farce of this green issue as well? When you see this happening, you know, the sanctions against Venezuela are going to be lifted so the US can import Venezuelan oil, and you've got Boris jetting off in a private jet, no doubt, to the Middle East to speak to the Saudis and to make sure that we get oil. Incredible. And I read in the inflation report that they put out on Sky yesterday that coal is banned from next year as well. You can't burn coal. And that was an interesting one as well. So there you go. Anyway, that will do it for this one. I've gone on long enough. Let's see what happens today and wait for the ceasefire in the morning, mid-morning, as we tend to get these days. But all eyes focused on the Fed for tomorrow night at 6 p.m. as they're an hour ahead now. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.